Good day, everyone. It's time for our market update again. And kindly note that we are making this review as of the end of April 22. Let me take out my pen. Okay. So let's start off with the daily chart of the PSEI. And I have included MACD and RSI as a technical indicator to give you insights about technical analysis so you slowly have an idea of what is it all about. So the MACD, which is one of my favorite technical tool, simply denotes whether the market is actually strong or weak. So you have a center line which is in the middle. Normally, when the indicator is moving above the center line, it normally suggests that the market is strong. And when it's below the center line, it denotes that the market is weak. So where are we right now? And obviously, we are below the center line. Therefore, the bias is actually more on the downside. Similarly, the RSI has this 50% median. It moves from 0 to 100%, but it never reaches that 100%. And normally, it simply suggests that the market is overbought when it reaches 70 to 80%, and the market is oversold when it reaches 30 to 20%. For now, it is below 50%, but somehow the trend is suggesting that the market is relatively weak because it is unable to recover the previous highs. But what I would like to point out is that what I saw last Thursday before closing lower on a Friday, which is somehow a similar move to what we saw last February and last November, and quite close to what happened in the middle of June last year. And normally, somehow I've pointed the top, no? But looking at in hindsight, somehow it is very clear that the market really went down after hitting the top. But what is surprisingly noticeable is that somehow the tops of the market is, ominous. It's quite similar looking at the highs in November, the highs in February, and the highs last week. Okay. There is a combination of a green and a red candle, wherein the red candle, which denotes a lower price session for the day, is actually longer than the preceding green candlestick, which denotes, a bullish session the preceding day. So when the market registers a green candlestick, it means it opened lower and then closes high. So that means during the day, the market was bullish. But if it's going to be erased by an engulfing candlestick, which will open higher, maybe a continuation of the bullishness of the preceding day, but instead close lower than what was the opening of the previous day, then that is what we call an engulfing candlestick. And that is the sign that we are seeing right now. But of course, that remains to be sustained by, continue the market correction. So that remains to be seen. But in most cases, expectations are always, sustained. So, however, if ever the market is going to fall, it's not going to fall dramatically as what we've seen in 2020. Do not be scared. It certainly is just going to establish a new bottom, perhaps after testing the 6,900, 6,800 support, which was kind of strong at 6.8. If ever that gives way, then we are seeing somehow 6,600 level down to about 6,400 level when last year's low was at that point. Okay. So my take on this is that whenever the market goes down at that level, that would only be, a window for you to consider getting into the equities market, either in particular stocks or an index. On the local front as well, let's move on to looking at what is happening in the peso dollar exchange rate counter. And somehow it's still relatively, stable going up as what we have pointed out recently, because the the rate has gone past above the moving averages, which was falling since 2019. By the way, this is a weekly chart. So somehow the trend has reversed, starting from the middle of last year when it has bottomed at about 47, 48 area. And it's now on the rise, and it's bound to perhaps test the 54 peso area. And as we have known, or we have said a while ago, the MACD suggests that the market is actually upbeat. Okay. So perhaps the reason behind the a weaker peso is the spike in the oil recently, wherein it prompted a lot of importers to buy the needed dollars in order to import some foreign goods. And it already showed also in the recent trade data that we had been importing more than we are exporting. Some market news locally. Moody's gave local banks a stable outlook. Well, this is positive news. So, despite the challenges that the banks are facing right now, somehow the Moody's are giving them a stamp of approval that somehow the outlook is still stable. IMF sees faster growth for the Philippine economy in terms of GDP, adjusting their outlook to 6.5% from 6.3%, an improvement. So perhaps with the continuous low cases that have been reported on COVID, and the business opening slowly for the market would contribute to this. However, what we are seeing as somehow one of the party pooper, for this year would be, of course, the inflation, wherein right now it has breached the 4% level, but the BSP is still confident that it will be contained within their target range of 2 to 4% towards the end of the year. On the offshore market, the Dow Jones Industrial Average on the daily side has also shown somehow last Thursday, an engulfing candlestick, which is a very clear engulfing because it has covered the whole area of the preceding green candle last Wednesday, and only to be followed by a stronger downward movement Friday. And while the MACD is above the center line, it is bound to check or test the center line quite very soon. And you would notice the high towards the beginning of 2022 is also an engulfing candlestick. Okay. So what's being widely watched as well is the price of world oil, which is favorably going down, but still way above the $100 mark per barrel. But what I'm seeing in this chart is that there is somehow a support somewhere at about 90s level, of 93 or 94. And we have seen a high at 130, and then about 116, and then recently 110, and it is descending. But if you're going to draw a line like that, okay, it will look like a descending triangle. A descending triangle in technical analysis suggests that, you know, it is actually a continuation pattern for the market to fall once the support line is actually broken. In fact, it can be measured as to how far can it go lower based on the base of the triangle, which is from 130 to about 95, let's say. So that is $35. So if the support is broken, we would expect it to somehow go back to about 60-ish level. So hopefully that happens within the year, and very soon. As for our advice of the week, somehow we got a query, from our mailbox. And the advice being asked is how can they manage their ballooning credit card? So this is from a young couple who recently settled down, but somehow some of their expenses cannot be avoided to be charged the credit card. And I believe after a few months of into to their honeymoon, okay, and this is the realization. So this is coming from JM, of course. We don't want to divulge his identity, and this is what we are going to discuss, in our next video. Incidentally, some of the advice already I have already said it during my Money Mondays series, wherein the videos are already uploaded in our page, the Fast Exchange. So kindly like, our page and watch our videos. Weekly, we are going to post new videos. As I've said, market updates every other week and answer to questions, advice, and even some concepts that we can discuss. If you have any questions, suggestions, or comments, query, please don't hesitate to email me at rikiso@thefastexchange.com. Thank you and mabuhay.